Another headliner, Tom Lee, who says it's no surprise stocks are struggling recently, and Uncle Sam is to blame. He joins me now at Post 9. So it's all Uncle Sam's fault, tax day, and then everything's going to be cool?
I hope things get better, but yes, this year, April 18th is tax day. It's an extraordinarily big tax hit. We calculated what we estimate Americans owed. It's about $828 billion, excluding crypto. Crypto is probably another $125 billion in taxes owed. So about $1 trillion went to Uncle Sam today.
And no, but you think literally, like you get today out of the way, and then there's a noticeable and notable impact in the market?
Yes. We looked at years where the market was strong. The 2 weeks into tax day, our markets are weak. There were a lot of folks caught off guard because they thought they had until October, and of course they don't. They have April 18th. So there was a bit of a frantic push, and hopefully this takes away indiscriminate selling.
Okay. We have to discuss this tweet of yours where you agreed with somebody, and honestly, I saw this over the weekend, and I was like, what? I was like, what is Tom talking about? So I came into that. I was like, we got to get Tom Lee on. A gentleman by the name of John Carter tweets the following: the increasing shift out of financial assets into hard assets will soon turn into a panic move. And you said agree 100. And I'm like, wait a minute. Tom Lee comes on the show and he's bullish and he says the lows are in for the year. And now you agree 100 that there's going to be a panic move out of financial assets. I'll let you explain how that makes sense.
Yes. Well, because not all assets are equities. There's a lot of financial assets that are terrible inflation hedges. Americans today own $55 trillion worth of bonds. And they are going to get their quarterly statements. Bonds are down 7%. 25% of all 10-year periods since 1880, bonds have had a negative realized return. We're probably entering another decade. So there is going to be this, we believe, a panic out of bonds. It'll go into income-generating real assets. And a big chunk, we think, will be TINA, which ends up in the stock market. So I don't think people are going to sell stocks to buy real assets, but they probably will sell a lot of bonds.
So you're talking specifically about the bond market and money coming out, because it doesn't say that. When I read this, I was like, what?
That's right. And I probably intentionally left it a little vague just because, it's the weekend. I was having a little fun.
Okay. You knew I was going to call you and be like, what in the world is this? In all seriousness, you do have people suggesting that there is an alternative, that TINA's no longer TINA, that maybe bonds are an alternative to stocks.
Yeah, I mean, it's getting to be very tricky now because we have inflation that is quite elevated. We don't know if it's going to cool. Hopefully, that's our base case, that it cools. And we know that bonds yields have moved to a level that people might want to actually own some bonds. But the reality is if rates do creep up, so we have positive real rates, meaning the 10-year goes towards 4 or 5, anybody who owns that $55 trillion bond complex is going to lose another 10%. So you're talking $5 trillion of realized losses if people don't rotate out of bonds.